Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Nextalia announcing a final closing of 150 million VC fund. Very interesting angle. Checking the news, essentially, what was very interesting for me was the LP base. So a lot of institutional, insurance, banks, and a percentage also of private investors and family offices. So it's a very nice composition. What I would say is definitely on the more sort of like a sophisticated side as an LP base. So basically definitely something more toward like what is the classic big fund composition, I would say. And Nick, correct me if I'm wrong, Nextalia is an SGR, which basically as of today, they have like 1.2 or 3 billion under management. So they've been in the financial sector for a long time. This is their latest creation when it comes to venture funds. So they're focusing into B2B businesses, so a kind of broad spectrum. And my understanding is that they're not only focusing in Italy, they're really trying to have like a very international breadth when it comes to investment. So what is your take on this one?
No, I agree with you. Nextalia comes from the private equity sector, so from late stage, EBITDA positive growth, but not too much growth related business in the broader economy, and this is the first pure play venture capital fund. This is not, strictly speaking, an early stage fund, as far as I understand. It's a bit more growth related, with sizable first checks. I think above 10 million, more or less. And this is kind of a rare beast in Italy. So we probably have no more than a couple of funds doing this type of tickets. The other being United Ventures, maybe. So good to know. And of course, when you go this big in terms of tickets, you broaden your at least the geography you're looking at. Because you need deal flow, and we can be, we need to be honest around the deal flow in Italy. So we have a lot of seed stage, early stage deal flow, but when you climb the pyramid, the good 10 million plus deals are, less in a sense. So it makes sense that they will look at the broader markets. So good news, as you said, a diverse, more standard type of investors in the fund, but being a private equity company, they have a history, they have connections, so it doesn't surprise me that there's this diverse base of LP investors. I think that the excellent news is around their execution. So they raised the final close of the fund in like 6, 7, 8 months. I think that was quick, extremely quick. So kudos to the team for the result.
And also when it comes to thesis, they say that they're going to focus on startup and scale up. So we always think about how exactly in Italy there is a missing piece of the puzzle, which is funds that are big enough to actually follow on Series B, C, and forward. And that's another way. I mean, that's another player that can actually support that growth. So another good news, I would say, on this respect.
Yep, agreed.
Fantastic. So let's talk about Primo Climate. Primo Ventures launches Primo Climate, growth-focused VC fund to boost innovation in the climate tech sector. Another addition to the family. So what is cool is that what you guys are doing is really like trying to touch a lot of like very sensitive and high sector with high potential. So starting from, of course, digital space and now climate. So that's super interesting. And I know you guys involved also like other people to actually build this fund. So tell us more. Take a few minutes to tell us something more about this.
Yeah. Yeah, thank you, Jack. So the fund was announced last week, so you're fresh from the news. Yes, indeed, you're right. So our strategy is to try to cover specific verticals with focus teams. At the end of the day, software is different than from space, and climate is another beast altogether. So we think and we believe that you need expertise in order to understand uh, the sector, to study the sector, and to take informed decisions, informed investment decisions. So we have this growth strategy around diversifying the firm with different funds managed by specialized teams. And climate is, in a sense, well, the fourth installment of this strategy, uh, the third being a health, medical devices vertical, but that's another story. The climate fund is an early stage fund, meaning they will not do pre-seed or technology validation tickets. They will try to invest 1 million plus in climate tech startups in a broad range of verticals. So not only carbon capturing, for example, but also in agri and food tech, materials, industrial, energy. So the spectrum is quite broad, with a strong focus on Italy. So focusing on the geography, they decided to have a broader spectrum of verticals they cover. And that's it. So 400 million is the first closing, and the goal is to get to 60, I believe, with a very
Yes.
strong team with an excellent track record. And we've got LifeGate, um, uh, the organization as a partner, helping us in better completing due diligences and better understand the markets and the verticals. So best of luck
Awesome.
to the team, and let's see how it goes.
Yeah, a few points here. Like first of all, both I would say Primo Climate and Nextalia have Venture Italy too as investors. So CDP is allocating funds to new venture funds, which is a good news. And yeah, it's nice to have like a common investor over there. So what is your take on the activity on that CDP is doing, especially regarding to funds actually?
Well, so the fund of fund managed by CDP, and this is the second installment of the third, I don't remember. Anyhow, they are still a key player in the Italian ecosystem. So they're present in almost all VC funds that are being launched in the market, either as a cornerstone investor or as an important investor. I think in the Nextalia case, they're not cornerstone, but they're still present as, a, as an important investor. So this is capital that the ecosystem still needs. And I think this will be true for some time still in the future. Even though you are starting to see other big players investing in funds. So NPAM, for example, is one of the investors in Nextalia, I think. Uh, it is one of the pension funds, so vertical pension funds in Italy. And other are moving. So the big money managers are starting to allocate capital structurally in the VC space. And I think this will be the next important step for asset managers to
Awesome.
continue launching new venture vehicle, investment vehicles.
So one interesting element is also that the fund is ex Article 8, which basically is a very precise classification of venture funds, which basically, and then correct me if I'm wrong, basically they support the global development goals from the United Nations. And then that has implication for sure in terms of reporting and so on and investment. So Italy is pretty sensitive to this kind of initiative. So it's a good news also to people that are investing in sustainability and climate tech with a certain angle. Then they can benefit from this specific outlook, I would say.
Yeah, well, SFDR is the Sustainable Disclosure Financial Regulation emitted by the European Union a few years ago. That's basically a set of rules around how a fund manager, an investment manager, collects, discloses, reports, and takes decision around investments with an angle regarding sustainable goals. And the SDGs from the United Nations is a way to look at potential goals, but think ESG, environment, social, governance, KPIs, and there are basically, this is gonna be wrong, but let me simplify. 3 different classes: Article 6, 8, and 9. Article 9 is usually the one adopted by fully impact investors, meaning that even carry success of the fund is related to KPIs other than pure financial results. Stupid example. My carry will depend on my financial return and the amount of carbon that my portfolio actually sequesters from the atmosphere, net, whatever.
Right.
Okay. Article 8, and in Primo, we commit to have all new funds to be at least Article 8, is around adopting ESG rules in analyzing, searching for, monitoring, and actually improving the companies we invest in, according to KPIs other than purely financial, so related to environment, social, and governance. It then depends on the specific company where you want to what you want to see, what you want to measure, and how you want to improve these KPIs. And we have a strong commitment at the firm level around being about taking this type of view and approach to sustainable investments going forward.
Awesome, fantastic. In the third one, talking about Rancilio Cube announcing a second international VC funds of funds with an allocation of 50 million. So we spoke about Rancilio in other issues, and to me it's always fascinating how this guy is actually in the forefront of VC and has been like, doing that for a very long time, as probably one of the most venture sophisticated family office in Italy, I would say, if not the most sophisticated, I would say. So what is interesting is that so the company closed 2023 with about 60 million euro in assets, and basically they have a very interesting crossover mixed approach when they invest, especially in Rancilio Cube 1, which was a great way to think about venture. So they have about like 40 direct equity positions in direct investments in companies, with about 75 venture top tier VC firms. So they're doing both direct investing and funds of funds. So a very interesting structure, pretty unique. I also am aware that also the fee structure is very, very light. So it doesn't work like a traditional venture firm. And they've been basically part of some of the LP base of some of the most famous US-based funds, which are very difficult to access, starting from Khosla Ventures to Bessemer Partner and so on and so forth. And also like very interesting positions in very great companies. The second iteration, probably I'm very curious to see how this thing is going to evolve and, gifts us with some other like a splendid way to build a portfolio, actually. I mean, it's a beautiful portfolio for sure.
Yeah, This is very good news because they're very good. They've been doing, they've been allocating capital in US and the rest of Europe for a decade at least, I think, even more. Uh, so very good. Luca Rancilio is doing a great job. Too bad. I think most of the investment will be outside of Italy because he's really targeting at international funds, international companies. Uh, but well, I mean, it's a nice story at least. I was
Awesome,
taking a look at the
awesome.
website. I don't know whether you took a look at the website. So the type of logos they have on that is like, wow, very
Yeah,
nice.
definitely. Fantastic. All right, let's go back to Startup Land, talking about some of the big fundraise of the week. So, starting from Cubbit, again, a Primo Venture portfolio company, distributed enterprise storage startup raising 12 million in a round led by ETF Partners and LocalGlobe. With, of course, you guys, CDP, then Azimut, Growth Engine, and Moonstone. So let's talk about Cubbit. I mean, maybe spend a few minutes like telling something about the technology. So the keyword here is, I believe, S3 cloud storage, which is geo distributed. But Nick, you are the expert here, so I let you spend your couple of minutes on this one.
Oh, well, yeah, but Comet started out with a clear goal in mind to take away data centers, physical data centers from any storage equation. So when you install Dropbox or use any storage solution, you are using some data center somewhere in the world. So that data is stored in a physical location, maybe two, three, if it is redundant and geographically distributed, but that's it. Huge fixed cost, consumption, security, up to grade, let's say so. And the basic idea was let's take away data center from the equation, let's make the storage fully distributed, and let's adopt redundancy and security algorithms that are top notch. So basically, data is yours. Where is the data? You decide where is the data, but it is distributed wherever. You can set up your node if you want, but all is safe and yours. And when they started, they were a group of kids still in university, and we invested back then. At the very beginning, we were one of the first tickets into the company. And then the guys grew from there. So they pivoted, they grew, they made mistakes. Then they started, deciding a specific focus, specific trajectory. They built an excellent team at the national level. They decided that S3 and enterprise storage decided and found out that S3 and enterprise storage was the killer use case, and it is the use case that they are after right now. So basically, they are trying to go after Amazon and all the S3 storage providers by offering a fully distributed, fully owned by the data owner S3 storage infrastructure with lower costs, of course, because there is no data center in the equation, and with an enterprise grade solution. And I mean, yeah, this is still early in the road to growth, but this round is a very nice signal that they might be on the right track. And in the last few months, they took on board very very excellent partners and important brands that are starting to adopt the technology and distribute the technology as partners. So exciting things, but still a long way to go.
Awesome. And it's a fairly big round actually. Like 12 million is definitely substantial. Not easy in this climate, and so definitely kudos to them and to you guys to actually like follow on this and bring the company up. So that's great news for sure.
Yeah, I think this is the next step of the growth trajectory. So now finally they have international investors on board, and this will bring a new pressure to become an international company. um, and they will be laser focused on maturing the product and going to market. So
Awesome.
we'll be here
So
looking and supporting and cheering for this technology because we believe it
awesome.
is top notch. We are using it. So I am using Cubbit.
You're
Maybe
currently
six.
using it. That's good. That's good. I
Absolutely,
mean, that's
absolutely, absolutely, and it
nice.
works quite well.
That's the proof. Fantastic. So yeah, a lot of other news, basically in the past couple of weeks. So I encourage the listener to actually check out Nicolo's newsletter because there are like really a lot of things that happened in the past weeks. Let's focus on a few insights before we end up this episode. So let's talk about Satispay. So that is expanding the offering of their product into investment product. So very interesting move. Satispay is a platform that, as of today, they have like 4.8 million users, active user. I basically, from what I was reading, is about a million is already using their sort of saving product, and as a sort of a next extension is actually to offer like selected financial product. So interesting angle. I mean, digital banks have been doing that as well. Payment companies. That's probably like I don't know if it's a natural extension or it's a less natural, but still very. I mean, for sure, very profitable. But definitely something very interesting to provide access to investment product. And again, democratization of investment product, of selected investment product. So with all the possible like barriers and filters, but definitely something to bring up to the next generation of retail investors. So that's where it's going.
Yeah, yeah. I'm very curious about how they will productize this thing because this is basically a rumor. The fact that they're moving into offering investment products. It seems that they set up a vehicle in Luxembourg, and they started working on this type of new offering. But at the end of the day, if you think about it, Jack, they have a wallet in your phone, and you move money into their wallet, so the money is on their premise. So actually thinking about investing that money as you're not spending it, it makes sense. It's already there. It's in the wallet already. So
Yeah,
basis
sometimes.
points everywhere.
Exactly, and sometimes I really feel is more than a financial decision making problem, is more of a UX problem in the
Hmm.
sense that a lot of people, and we know our generation knows way better how that investing is something that it's kind of required. You need to do that to actually build a stable financial life. Sometimes though the problem comes, I need to call my financial advisor. I need to open a brokerage account, and all the definitely the hoops that can take you away actually your focus. So how many times I'm sure a lot of retail investor have like delayed their decision in investing also because of the barriers to access. So being able to do it in a couple of clicks, that can be really really massive. So it's not a financial sophistication problem. It's more of a I need to get this done because I know it's valuable. So the
Yeah.
UX problem.
Yeah, I agree. I agree. I think we didn't have the a Robin Hood moment in Italy, I think. Robin Hood is only in the US, I believe.
Yes, you need a US address.
Uh,
Yeah,
but it was a UX revolution, right? I mean, you invest
correct.
in a thing and you have confetti raining down from the screen. That's absolutely bollocks if you think about it. I mean, you put money in a company and the app is congratulating with you. I mean, and some commentators say that the meme stock wave of the 2020-21 was actually in part fueled by the fact that Robin Hood was there and people, was bored and played with Robin Hood and, there were confetti everywhere raining down. So in a sense, this evolution or revolution in UX allowing a different way of investing I don't know. Will be interesting to witness the
Yeah,
effect of this
definitely. With all the
on retail
dangers as we
investors.
witness is in the US, all the dangers and all the good part. So yeah, definitely interesting to
Yeah.
see. Awesome. So let's end on another high note, talking about Bending Spoon. So, digital publishing platform Issuu acquired by Bending Spoon. So, Bending Spoon has been on a spree of acquisition. Very interesting to notice. We always try to kind of connect the dots and see where they're going. Yeah, I mean, that's another piece of the puzzle. So, what is your first take on this?
My first thought was, God, they're acquiring all the brands from years of yore. So, I mean, Evernote, Issue, all things that we knew or used a few years ago. So basically, they're basically acquiring brands that are known, but maybe less used, and revamping them, or at least this is a strategy. And that's interesting. That's interesting. Uh,
Yeah, it's the nostalgic millennial approach. I've
yeah,
just baptized their strategy, their
exactly.
M&A strategy.
Exactly. Then we should open up the what's next lottery, go back to the 2010s, and think of a piece of software that you use and then you don't use
Yeah,
anymore. That
no,
maybe is a
totally.
target for the next acquisition.
Absolutely, absolutely.
Hmm.
Interesting, but definitely a great example of how one of the most successful probably Italian. I mean, it's not even a startup anymore. It's way
No.
more than that. I mean, we cannot classify that. So that's it's always like a good example to actually see how they're moving and what they're doing and how they're making. So definitely kudos to the team and to the great operations. So very curious to see what will happen then.
Yeah. Well, now actually, my curiosity is what they will do in terms of liquidity going forward. Will they stay private? Will they go the private equity route? Will they go public? Where they will go public? When they will go public? If
Great point.
so,
Yeah,
I mean,
great point.
I'm very curious about the next steps in terms of you know extraordinary
I mean, and
operations.
it looks like they're also are they have a lot of routes open if you think about that. I mean, they're not an Italian company anymore. I mean, with Evernote, with so many like US based investors, they're really like sort of, geography is not an issue anymore. I mean, they can easily be taken as a US company that maybe go public in the US. And
Well, here I kind of disagree with you. I mean,
okay,
it is an Italian company and it has a lot of operations in Italy, headquarters are in Italy. So it just happens that it is an international company headquartered in Italy with strong Italian roots, but it's still Italian as a company. Um, but then you're right, they can decide to move and grow in the next phase anywhere in the world, and that's plausible. I mean, if I was them, I wouldn't go public here. Of course, I would choose an exchange that's where people know about technology and are used to invest in technology, and that's probably not Italy. So we're strong in financial services.
yeah, I
But
mean,
then, well,
what is interesting is that last May I was in the US for a few conference, and for the first time, people when they knew that from family office mostly, I would say, you start like talking about where you're from and so on, talking about startup and Italy, first name coming out of their mouth was Bending Spoon, and that happened a couple of times. So and I've never had an example of any other company from Italy like with that kind of visibility. So very curious on what's gonna happen. Yeah, for sure.
yeah.
All right, Nick, super insightful. Thank you so much for giving us the time. And that concludes our week's episode of the Week in Italian Startup. Please subscribe to Nick newsletter and to the channel, and I'll see you all next week.
Ciao, Jack. Thank you very much. Talk soon, and ciao, everybody. Have a great week.